to our year-end tax planning webinar series. Thank you for joining us. Today we're going to be talking about the Employer Retention Credit, also known as ERC. We've put together some topics and ideas about year-end tax planning items as we get ready for filing next season, so we hope that you enjoy this video. Today I am joined with Brittany Carmen. She's a partner here at the firm. Brittany, if you don't mind, can you introduce yourself and tell us some of your responsibilities that you do?
Sure. Hi, I'm Brittany Carmen. As Matthew said, I'm a partner here at HHM in the Accounting and Assurance Department. And over the last few years, I've helped our clients and consulted on the government funding related to the Paycheck Protection Program and the Employee Retention Credit.
Speaking about the Employer Retention Credit specifically, from a high level, what is that and how has that affected year-end tax planning this year?
So this year, I just want to encourage all businesses that haven't already claimed the Employee Retention Credit to go back and look at 2020 and 2021 and see how their operations compared to 2019 to see if they may qualify based on the gross receipts reduction or based on a partial or full government shutdown order. Because the Employee Retention Credit is a tax credit that was created under the CARES Act to provide additional COVID-19 relief for businesses that suffered during the pandemic, with the intent to encourage businesses to retain their employees. So if you're eligible for that, this is a benefit that you definitely want to take advantage of.
Okay, so you briefly mentioned them, but can you just give us a quick definition of what does it take for a business to qualify for ERC?
For a business to qualify, they must either experience a reduction in gross receipts in 2020 of 50% or 2021 of 20% versus the same quarter in 2019. Or they could experience a full or partial shutdown due to a government order. So that could be a city or a state or a federal order that forced them to shut down operations for a certain period of time.
So once we clear that hurdle of we think we qualify based on the gross receipts or government order, what percentage of an employee's wages qualify, and is there any caps on that?
Yeah, for 2020, the refundable tax credit was 50% of the qualified wages per employee with a maximum of $5,000 for the year. However, in 2021, that amount increased and the refundable tax credit was 70% of qualified wages or healthcare expenses per employee for a maximum of $7,000 per quarter, making that $21,000 for the year because the Employee Retention Credit only goes through September 30th of 2021.
I gotcha. So it seems like through this whole process from when they first announced it, it's kind of been some moving goalposts on the rules and the legislative process. Is there any new entities that we want to highlight or specifically mention that qualify?
Well, I do want to mention that there is an option for a recovery startup business. So certain businesses that started up after the pandemic or just prior to back in 2020 may qualify for Q3 and Q4 of 2021 to claim the Employee Retention Credit.
Okay. So once we think we qualify, we've kind of come up with our calculation or a rough idea what we might get. How do we go about claiming this credit?
So in order to claim the credit, you'd have to first obviously prepare a calculation, figure out what your credit is, and then file an amended 941X for each quarter that you qualify. And that goes back all the way to March of 2013. For the first quarter of 2020, it would be claimed on the Q2 941X, but then going forward, you would just claim it on each respective return.
I gotcha. And then so that's from a payroll tax perspective. From an income tax perspective, how does it impact your federal filings?
Unfortunately for businesses, the Employee Retention Credit is taxable, and it has to be claimed in the year in which the wages were paid. So now that we're in 2023, if a business was going to claim the Employee Retention Credit for 2020 or 2021, then they would need to go back and amend their federal tax return to show this credit as a reduction of wages on that return.
Okay, so a lot of moving parts. Kind of just a recap or one thing to backtrack just a little bit. What are clients needing to retain documentation-wise? I know we've talked about a lot and there's a lot of things that go into this calculation, but what are some of the specifics?
Well, one thing that I haven't mentioned is that in September of 2023, the IRS stated that they have stopped processing new claims for Employee Retention Credit as they're trying to catch up on the backlog of about 600,000 claims that they've received so far. And so one of the things that they're looking at is a little bit deeper at that documentation. So for government shutdown orders, if a business claims that they qualify based on that, you're going to want to retain that order from the local or state government or the federal government that forced you to shut down your operations. And then from a gross receipts perspective, also maintaining your quarterly gross receipts that ties back to your federal tax return for the gross receipts to show that you've had that reduction, that you've done that comparison.
Awesome. Well, thanks for coming today and thanks for talking about this. It's been a lot of information. Hopefully we've talked about some topics that raise maybe some questions or some key insights to this credit. As always, you can look at our website, www.hhmcpas.com. There's more information there, and there's ways to contact us and get in touch with us if you need some more help in this area. Thank you for watching, and we hope to see you in the next video.